Welcome to the Sustainability Circuit Show. We'll be discussing where business meets responsibility. Join me as I speak to industry leaders across Kenya about their personal journeys and how sustainability became part of their company's strategy. Stay tuned for these conversations. We'll be highlighting real impact, what practical solutions and the value for businesses when it comes to sustainability. Let's begin the conversations. Antoinate, karibu sana. Please feel free to introduce yourself, your background, and what you do for work.
Thank you, Jen. I'm Antoinate Oron, a climate and ESG risk manager, a mechanical engineer turned sustainability champion. It's a pleasure to be here.
Thank you very much. It's good that you set the background for us here, because I remember that was one of the interesting things, from a mechanical engineering direction to a sustainability direction. How does that transition happen? Like, walk us through it. Because when I hear mechanical engineering, I hear cars. So make me understand, how does that transition happen in a world like yours?
Okay. So there's that thing about mechanical engineering just being about cars, but unfortunately, or fortunately for us, it's also about energy and manufacturing. So when I talk about energy right now, the focus is on renewable energy, and manufacturing, we are talking about decarbonizing manufacturing and also waste management, which is also in manufacturing. So bringing all that knowledge to sustainability was quite easy, and here we are. Yeah.
Perfect. You set the scene. I want to set the scene for my audience at home, because when we talk about sustainability and when we talk about ESG, we don't want to bring those two things synonymous. They are interconnected, but they're not synonymous. So for my audience at home, when we speak about sustainability, we are referencing to sustainable development. This is envisioning a world where planet, people, and profits coexist in a manner that is not deprecating, and also ensuring that we preserve some of those resources for the future generations to come. When you hear new terms like ESG, this is environmental social governance, we are referring to a framework or principles heavily in the investment and financing space, where we allocate funding to projects that are thinking around their business models sustainably, which means it's more specific. There are metrics, there are data that we're measuring from an environmental point of view, a social point of view, and a governance point of view. So when we bring those two things in a basket called ESG, an investor now understands in a measurable and comparable way what your business is doing. This is now bringing me back here, now that we've set the scene for our audience at home. From a banker's perspective, right? When I bring my money to the bank, whatever you do with it, sometimes we really don't question, right? But bankers are thinking more responsibly on depositors' money. So if you could set the scene from a banking scenario, how are banks thinking around sustainability?
So thank you again for that question. I want to say that ESG is an enabler of sustainability. So sustainability is the vehicle, and the engine is the ESG.
There goes those mechanical.
So for a bank, you bring in your money, but then now they'll bring in stuff like IFC performance standards closer to the people. I'm sure these are things that a normal citizen, a normal person is not aware of. So when somebody brings their money, we have to do our due diligence, make sure that at the end of the day, our operations at least help someone. So for example, right now, there's a whole new wave on enabling last mile financial solutions, where there's a focus on MSMEs, retail, digital lending, and also just empowering women and youth. So you find that your money will be used sustainably in that way. And then also banks now, they're looking at stuff like, what are the emissions? What are our carbon emissions from our financing? So it means that when a company comes in, like big corporate or an institutional banker, first thing first, what is their risk? What is the environmental and social risk? Are they category A? Are they category B or C, in that order, A being the highest? And then now you'll find that the money you brought, it won't be used to help an organization, because now that money is what is used to lend. It won't be used to lend to somebody who really spoils the environment, or somebody who is involved in gambling, prostitution, name it.
It's interesting that you bring that dynamic, because a depositor sometimes is not thinking that whichever way the bank decides to maximize my profits should go in a sustainable manner. But disclosures are coming in where we're saying our portfolio, how we've decided to refinance or finance projects, will be aimed towards this criteria. Yeah. How tight, or rather stringent, do you think the criteria has gotten now? Because traditionally we would hear these commitments with, we hope to transition, like right now we're in the red, but we hope to transition to the green. Do you think we have transition plans that have gotten to the green now, where we're saying our commitment is, if you don't meet these standards, we will not be financing your business?
They actually work right now. Truly and truly, I can say that they work, in that their banks have exclusion lists right now that I said, if you're into gambling, please just go back. We're not going to give you your money. We're not going to do this and this and this for you. And now also our country, we find that we have the climate risk disclosure framework that needs banks to talk about these climate risks that come in with lending and all, and operations. And also, like I said earlier, IFC performance standards, UN Global Compact, people are signatories to such. And there's the World Bank. People, we just have to do them. Like bankers have to do that. So once you're in the exclusion list, there's no going back. There's a due diligence, there's screening, there's site visits, there's all that. So it's tight right now.
And I know we're talking from a compliance point of view, and sometimes somebody will say, but Jane, these are just compliance things that people can kind of buy their way into it. From a customer point of view, let me put the institutions aside, because someone would ask, why is it that we're just aligning with all these other external parties? From a customer point of view, have you seen businesses that are saying, you know what, we do actually want to do business in a sustainable manner, and we are thinking of a transition plan towards more sustainability as an internal initiative, rather than a financier pushing that initiative?
Yes, there are so many businesses right now doing that. Of course, we can't mention names, but we've seen sustainability reports where people are just doing so much. People transitioning to solar, treating their staff better, and even giving back to the community. That is sustainability as a whole. Yeah, so it's happening.
I'm going to capture the critic at home that's saying, but these reports are just greenwashing, right? Because I know I would like us to talk about the data element, right? In a world where greenwashing is so high up there, I know we don't consider it high, but it is quite high, because some of those initiatives that companies are also reporting, that we cannot verify them, we cannot measure them, and sometimes they're not auditable. However, we're seeing some institutions going ahead and even giving a level of assurance for their disclosures. So I'm bringing us to this place of, what kind of tools or measures are in place to help this problem of greenwashing?
That's a tricky one. But so far in Kenya, I don't know. There's one bank whose data was verified by a third-party verifier. But now the others, I think, they're just swimming and reporting. But now the good thing about banks is that there are a lot of stringent measures just to make sure that before something is reported, there's been a lot of internal verification. So for banks, I can vouch for them. You can take their word for what it is. But for others, I can't tell. Though, as I told you, the policies, the procedures in banks, they are followed to a T. Yeah.
Okay. I mean, of course, where depositors' money is involved, for sure, the processes around ensuring the safety and the commitment towards their money is tight. On that conversation of of greenwashing and how we're kind of trying to combat the problem that comes with falsifying information. Yes, we're green. And I know even from a regulator's perspective, we've released a green taxonomy that helps us align what terminology we use from an investment point of view. And we've also walked the journey of bringing disclosures. We're seeing mandatory IFRS coming. The likes of Global Reporting Initiative is still voluntary. For my audience at home, these are disclosure frameworks, what we refer to as the language in which you represent data and information. I want to talk about the innovation in that space because, again, there's so many elements. I know you mentioned IFC performance standards. I mentioned global reporting. There's IFRS. There's so many standards. What kind of innovation and tools are you seeing pop up in the space that address some of this complexities when it comes to reporting?
Okay. So, number one, for resource efficiency, there's the UNFCCC tool. So it helps people capture their scope 1, scope 2, scope 3 of emissions. It's quite good. You can just go online and download it. Though now you have to have knowledge of all those scopes and what you are going to report before you actually tweak it, which can be a bit tricky. And then now also it doesn't capture, like it is not localized as it should be. So there's that. There's now also FMO. You know FMO?
No, I'm not familiar.
Okay. It's a DFI, Development Finance Institution. So for those doing crediting and lending, they have a tool that will actually help a company know that the lendee falls in which category of risk in terms of E&S, A, B, and C. But that is just how far it can go. Yeah, so there's still a lot to be done in terms of data collection and data verification, which is a huge task.
Well, it's good because the sponsor of today, we've gotten to that point of the YouTube video where part of our company's initiative has built a localized data management reporting tool. It's called Ecoloop. And I know the challenge that comes with localization specifically is how do you contextualize sustainability data and metrics to a local context and to an operational context? Because even how the teams are structured is the sustainability manager will know what GRI and IFRS is, but the person handling water data metrics or procurement data metrics is not able to link those two things. So part of what we've designed with this tool is to ensure that we're able to link all these standards in one data management software and all this data and metrics in such a way that the sustainability manager can plug in all these players, collect this information, and get an output that helps them with their sustainability disclosures. Again, this allows with that tracing of where is the collection starting from? Can we audit? Can we assure this information? Because we're saying we're moving to a world where greenwashing will no longer be just up here. Anyway, I know our audience today, you've learned so many new acronyms and so many new words. So for someone who's sitting at home and is saying, I want to go on that journey. This sounds like something I've been wanting to do, but maybe my mind hasn't thought about it. If you're to go to Antoinette, I don't know how many X years ago, and you were to walk this journey again, what is a young person looking to get into this space and sector? What should they think about? How should they focus on that transition?
First of all, that young person has to be very open-minded because there's always something popping up. You wake up, there's IFRS 1, S2. You wake up, there's this, there's KGFT, the one you talked about. So you have to be very open-minded and flexible and be ready to study. You need to have information on the tips of your fingers every single day.
I'm smiling because this is so relatable.
You need to go to those websites, sign up, be getting notifications because knowledge is power in sustainability. So you can build the skills later, but only if you have the knowledge. Yeah, and maybe focus on data. There's a lot going on there. And also climate data right now. There's just so much going on. We have very few people who can do perfect scenario analysis. it's a huge gap.
And I know, especially from a banking sector, when you introduce the concept of scenario analysis and stress testing and your risk profiles, data is kind of the backbone of all this of all this context. But to be quite fair, scenario mapping for 30, 50 years from now is a conversation that I would put in the gray area, because it's quite hard with all macroeconomic factors that are constant to get good scenarios to anticipate from a risk element. But thank you so much for that, because you lay the context from a young person. Where do you start? We start with knowledge before you can even get to the skill element. And to the version of you now that is looking for a transition to support businesses in the future now, what does that skill set look like? What's that one skill set? What's that one line of thinking? What's that problematic area, even from just a banker's perspective or even sustainability perspective in general, that you should be working towards?
Have financial knowledge, be able to read the balance sheets and all, because it's a bit tricky when you want to embed sustainability into a business when you don't understand the business itself.
The business itself, right?
Yeah.
Ladies and gentlemen, we are coming to the end of this conversation. Thank you so much, Antoinette, for your insights. I know in a short, packed conversation, we're not able to unbundle much of these elements, but we hope to do a follow-up conversation on this, and hopefully we can discuss how do you bring sustainability and financial imperatives of a business together. So thank you very much. We look forward to hosting you again. To our audience at home, thank you very much for staying tuned up to the end of this video. Stay tuned for more episodes. Be on the lookout on our social media handles. And until next time, it's goodbye from me.